Hello everyone and welcome back to Zaki Crypto Update. It's great to have you here again. Today's video is packed with the latest updates on the Pi network and its recent developments. We're talking about how the PiCoin IO price survived a potential 45% price drop, and we'll dive into the details of the new App Incubator that Pi Network has recently launched. Plus, we'll take a closer look at the looming KYC and migration deadlines and discuss what this could mean for the platform's future. And of course, we can't ignore Bitcoin, which is showing promising signs of heading toward the $60 K mark. So if you're a Pi Network supporter or a Bitcoin enthusiast, this video is definitely for you. Before we jump into all the details, I have a quick reminder for you. If you enjoy the content and want to stay updated on all things crypto, be sure to hit the like button, subscribe to the channel, and turn on your notification bell so you never miss a video. Also, feel free to drop your thoughts in the comment section down below. I'd love to hear what you think about Pi Network, Bitcoin, and everything else happening in the crypto space. All right, with that out of the way, let's get into today's video. The Pi Network has been one of the more intriguing projects in the cryptocurrency world due to its mobile-based mining platform. So here's the deal. After failing to meet its original June 2024 mainnet launch deadline, the Pi Network team introduced a 6-month KYC Know Your Customer grace period to help its users complete their KYC verification and smoothly migrate to the mainnet. That's all well and good, but now with only a month left until the September 30th, 2024 deadline, things are starting to get a bit tense. Many users are still struggling to get their KYC applications processed, and this is a big deal. Without completing KYC, users won't be able to migrate to the mainnet, meaning they could risk losing the Pi coins they've mined so far. The platform is under a lot of pressure to make sure everything goes smoothly, but the lack of updates from the Pi Network team is causing concern in the community. It's understandable people want transparency, especially when they've invested their time and resources into mining these coins. The situation gets even trickier because even if users manage to complete their KYC verification by September 30th, they will still need to migrate to the mainnet by December 31st, 2024. If they fail to do so within this rolling 6-month window, they could lose their mined Pi coins entirely. This double deadline adds a layer of urgency for users who may be unsure about their next steps. The community has been vocal about wanting more updates from the Pi Network core team. The last thing they want is to be left in the dark as these critical deadlines approach. While Pi Network's innovations and new projects are commendable, they need to strike a balance between introducing new features and providing operational clarity to their users. Without it, user retention and overall network adoption could be at risk. Now let's move on to some positive news. Despite the challenges related to the KYC process and mainnet migration, Pi Network has been pushing forward with new initiatives. One of the most exciting recent developments is the launch of its App Incubator program. This program is part of Pi Network's broader strategy to build an ecosystem that fosters innovation and growth. The App Incubator program is a 12-week initiative designed to help developers create, refine, and launch applications that will operate within Pi Network's ecosystem, particularly when the network transitions to its open network phase. What's interesting is that Pi Network isn't just offering a platform for these apps, it's also providing mentorship from its core team and financial stipends to support development. The first cohort of developers in the incubator includes 5 teams, each working on different apps, and they are Connect Social, Picket Place, the Pidogo, Palette, and the last one, which is World of Pi Championships. These developers have been working hard to fine-tune their app designs, improve functionality, and enhance user experience. The goal is to have a robust set of applications ready when Pi Network enters its open network phase. This is a smart move by the Pi Network team because a strong app ecosystem can attract more users, create more utility for PiCoin, and help secure its place in the competitive crypto space. However, while this App Incubator program is a step in the right direction, it's important to remember that the looming KYC and mainnet migration deadlines are still the most pressing concerns. Pi Network needs to ensure that users can easily complete their KYC and migrate to the mainnet before focusing too much on future app development. If these foundational issues aren't addressed, the platform risks alienating its user base. Now let's talk about the recent performance of PiCoin's IO price. Despite all the uncertainty surrounding the network, the price has been surprisingly resilient. In fact, it recently survived a 45% drop scare that had many traders on edge. For those who aren't familiar with the term, An IOE in the crypto world is essentially a token that represents a future asset, in this case, PiCoin, which hasn't officially launched yet. The IO price had been moving inside a bearish setup known as a descending triangle. This pattern typically signals that a downward breakout is likely, which would lead to a significant drop in the asset's value. On September 13th, we saw PiCoin break below the triangle support trend line, which sent alarm bells ringing. It looked like the price was about to crash, but in a surprising turn of events, the bulls managed to push the price back inside the pattern. While the price recovered, it's important to note that this doesn't necessarily mean the danger has passed. The descending triangle is still in play, and if PiCoin confirms the bearish pattern, we could see a sharp decline of nearly 49%, with a target price of around $16.50. That would be a huge drop, and in the current market environment, it could have serious consequences for investor confidence. The fact that bulls were able to regain control without any major bullish news is impressive, but without stronger fundamentals, this price recovery might not last long. As always, traders should be cautious and closely monitor the price action for any signs of a decisive breakout, either up or down. Let's shift gears and talk about Bitcoin, which has been showing strong signs of a potential rally towards $60,000. Analysts are becoming more optimistic, especially after Bitcoin's recent performance. Earlier this week, Bitcoin dipped to $57,600 after MicroStrategy announced its purchase of 18,300 BTC for $1.1 billion. Despite the initial dip, Bitcoin quickly bounced back to around $59,700, and it looks like there's more room for the price to climb. According to some analysts, Bitcoin's price cycle suggests that we could see further gains before the asset reaches its next peak. One such analyst, Bob Lucas, uses a technique called cycles theory to analyze price movements. He believes that Bitcoin found a local bottom below $53,000 on September 6th and is only on its 7th day in a new cycle. This suggests that Bitcoin still has several weeks of upward movement ahead before it reaches its next peak. Next week, the Federal Open Market Committee (FOMC) will meet to discuss interest rates, and many observers believe that the Federal Reserve could announce its first rate cut since 2020. If this happens, it could provide a further boost to risk assets like Bitcoin, giving the rally even more momentum. That being said, there are still concerns about a potential recession in the U.S. economy, and these concerns could create volatility in the market. Rise Labs, a crypto investment firm, recently released a report stating that the key variable to watch is the U.S. economy. If the economy remains resilient, risk assets like Bitcoin are likely to continue their upward trajectory. However, if we see signs of a recession, things could get rocky. So what do you think? Will Pi Network be able to resolve its KYC and Mainnet migration issues in time? Will the App Incubator be enough to draw in new users and developers? And what about Bitcoin? Do you think it's going to hit $60K in the next few weeks? Let me know what you think in the comment below. Thanks so much for watching Zachy Crypto Update. If you enjoyed this video, please subscribe, and turn on notifications so you'll always be the first to know about the latest in cryptocurrency. Stay tuned for more updates, and as always, stay safe and stay invested. This video is for educational purposes only and does not constitute financial advice. Cryptocurrency investments are highly volatile and risky. Always do your own research before investing in any digital asset. That's it for today, folks. Thanks for tuning in, and I'll see you in the next video.